This is not financial nor professional advice. This video is for entertainment only. Hey everyone, wild market once again. We're getting the 1, 2, 3 punch this week, and it goes with Google, Facebook, and Amazon. And Google came out on Tuesday and they announced they're going to do a 20-for-1 split, which everybody got quite excited about, and their earnings were quite good. Listening to analyses afterwards, I think it might be overplayed somewhat, but it was at least positive enough that I bought some. But then along came Facebook on Wednesday, that's February 2nd, and they, of course, reported terrible earnings. Now, we want to remember this is on the fourth quarter, the Christmas quarter. We were expecting a Christmas rally in 2021, and that never occurred. We got sort of a mixed rally, let's call it, but it was a disappointing rally, if you can even call it that. But I think that quarter is going to be significantly better than this quarter because of the health of the country and the anticipated interest rate hikes coming in March. So I think if it's not good fourth quarter, it's not going to be good this quarter either. You can expect probably more of the same. So Google, it shot up on Tuesday, but Facebook brought Google down too. Now, Google didn't come down as much, but then along came Facebook on Wednesday, which was on February 2nd, and they just destroyed both whatever gains Google had made. I more or less got out of Google at the same price I went in, so it was like a break even. But Facebook, it went down 20%. Wow. And I immediately went to my shorts. And this time I'm going to my shorts with more conviction, and I'm going to the Sorty, SRTY, which is a triple leveraged inverse fund on the Russell 2000. For every dollar that the Russell 2000 goes down, it goes up $3. And it's kind of been the most consistent, let's say. It's more of a smoother ride. And I think I'm going to hold this until like mid-April at least, until we get that first rate increase and we see how that affects the market. I just do not see much in the way of good news coming. We had some good news with UPS, which shot up 14% on Tuesday because they had massively good earnings. And usually that's a pretty good barometer of what the economy is doing. But we're getting these disappointments on these major stocks, which are tearing things down. I think we have another 10 to 15% to go. There's other signs, like the real estate market in China has come down. And so Caterpillar is actually getting less demand for their machinery because of China's real estate bust. So, and it's so strange in the world what's happening with interest rates. China has interest rates like 3 or 4%. So they're reducing their interest rates in a minor way, like a tenth of an interest point. Okay. But the Bank of England and the United States are going to raise their interest rates. Now, Germany says they're going to increase their interest rates, but their interest rates are ridiculous. Their interest rates are like a negative 0.9%, almost a negative 1%. And how you can have negative interest rates is beyond me. But their idea of raising interest rates, instead of being a negative 0.9%, it'll be a negative 0.5%. You'll only lose half as much as you would because they supposedly raised the interest rates, which is ridiculous. So I think we have this overhang of Russia possibly invading the Ukraine. We have the interest rates likely increasing. I don't see any sign in my personal life from going to the grocery store, certainly, that inflation is moderating. So I think we're going to get an interest rate of 0.25%, maybe. I don't think it's so much of a maybe. I think it's a definite 0.25%. It could possibly go up 0.5%, but up to 0.5%. Yeah, 0.5%. Okay, but I think he's unlikely to do that. I think he's more likely to raise it 0.25% at the March meeting. And then in April, if inflation is still going, he'll raise another 0.25%. I think he's just very hesitant and wants to raise it gradually to see what the effect is on the market. So I'm in my shorty SRTY with conviction, and that's a triple inverse fund on the Russell 2000, and I think I'm going to stay there for sure. For 2 months, it would have to go below 50 for me to get out of it. I'm that convinced that we have enough negative news. Plus, we could get a surprise invasion of Ukraine by Russia, which would really set things back. So that's where I'm hanging. Amazon is coming out on Thursday with their earnings results, and we hope it's going to be positive. I think if it's a mediocre result, I don't think it's going to help much. If it's mildly positive, I don't think it's going to help much. If it's massively positive, it would have the effect of keeping the market from going down for a while, probably. But I think there's a big, huge tilt to the downside with this market. I think I want to be in shorts, and I'm staying there, and I'm staying there with conviction. This reminds me of Tesla. When Tesla was going up, and it was going up, and you would get scared because it was going up so much, and you would pull out, but then it would start to go up again. And what it did is it strengthened my resolve, and I just went back in twice as heavy. And that's what I'm doing with the shorts. I'm about 2/3 of my money now is in cash. About 1/3 of my money will be in sortie, SRTY, because I have more conviction. And I think that's going to be a net positive to boost my results up massively. I don't anticipate getting out until the end of April, probably. And that's a cheerful prediction, because I think we could get 0.25% increases for the next 5 months. And some bankers and analysts are already predicting that. So thanks for watching. Be sure to like and subscribe so that you receive future notifications. And good luck in your investing. Thanks for listening. I will see you in the future.